what happens after you've taken those initial steps, you've gotten your portfolio built? How do you stay diversified after successfully completing the building of your portfolio? To stay well diversified and balanced is the goal. And to do that, you want to maintain your target allocations on a regular basis. So what does that mean? That means rebalancing and deploying new money as it becomes available. So how often should you rebalance? We get asked that question quite a bit. My answer is typically about every 3 to 6 months, you should review your allocation. Just reviewing the allocation doesn't necessarily mean that you will need to do anything outside, of course, of model changes or sell alerts. But if you're significantly out of balance, you'll need to take some action. If you're not, then don't. The way that you figure that out is to use the portfolio tracker. That is a tool that's available to our partners on the partner website. Once you have all of your positions entered in, you can go to the output screens and it'll show you a really nice bar chart. It'll show you where you're over and underweighted. So what is significantly out of balance? I would say, it's typically somewhere being 25 to 35% over your targeted allocation. So in other words, if your targeted allocation for a particular sector is, let's say, 10%, you can have some drift, and you will have some drift because, different sectors of the economy perform differently at different times. And that is just part of the normal business cycle. So when some things are in favor, like technology was really in favor last year, the year before it was really out of favor. So when you're reviewing your portfolio, if you are 25 to 30% over or under your target, you probably should take action. It's going to mean that you're over or underweighted somewhere else. And you can see that clearly from the bar chart. So if your target is supposed to be 10% and you're at 12 or 13% or higher, that means that you need to shift some money out of that particular sector somewhere else. So how often should you check your portfolio? We get asked that a lot. I think there's a perception for a lot of people that if they use a financial advisor, that they're sitting in front of a screen every day, watching the markets, watching their portfolio, making decisions. And I guess that's true of some who take a trading approach to it. And so some people think that they need to be checking their portfolio every day. I would not encourage that. When should you check it? Well, you should check it when you need to place new money or you need to rebalance. Checking your portfolio too often will stir your emotions. They will either move your emotions to fear if you see that things are falling, or you may be moved to a emotion of greed if you see things really increasing. And emotional investing is a breeding ground for mistakes. So how often do you place new money? Well, I guess that really depends on when you have new money. If the principle that you should follow is dollar cost averaging. If you have regular monthly contributions that come from income, that is by definition dollar cost averaging. You're putting regular amounts of money, the same amount of money in or similar amounts of money in at regular intervals. The same principle applies if you come into a larger than normal sum of money that you want to add to your portfolio. Let's say that you get a bonus at work, a big bonus that you didn't expect. Maybe you sell an asset like a home and you have a lot of equity that comes out of it. Maybe you come into an inheritance. Well, if that's the case, if you come into a sum of money, break that up into portions and systematically invest it at regular intervals. So, take that new sum of money, divide it by, 3 to 6 months and get that money placed at regular intervals.